As interest rates have crept higher over the past 30 to 90 days, many dividend-paying stocks, utilities, etc., have been hit hard. But if you're interested in dividends, does this make it an even more attractive buying opportunity? Stacey, Gilbert, and Chad Morganlander are your Trading Nation team today. Chad, listen, most companies, big ones, do pay a dividend. So to say dividend-yielding stocks, it's a little bit large in terms of its description. I think we mean the ones that are more heavily bought because of the dividends. Many of them have fallen. Are you stepping in to buy now?
Okay, for full disclosure, Kevin Karan and myself run a rising dividend portfolio. And not all dividend companies are the same. We'd be looking at companies that have a consistency, consistently growing, consistently profitable, with a well-capitalized balance sheet. Now, the dividend we would go for here is in the range of 2 to 2.5%, and we would be looking for companies that are redeploying capital back into their business and are growing. The high dividend stocks we would tend to shy away from. They're more slower growing, more interest rate sensitive. And we believe over the short run, over the next 3 to 6 months, that we could see this group actually outperform even in a rising interest rate environment. And that's the critical thing here. We believe that they have less volatility, more certainty in regard to their free cash flow. So we'd be buyers of this group.
Buyers of this group. And so it's not just the rising dividends, Chad, that you like. I mean, that's your fun. But we're just talking about the dividends that may not be going up. They're just there. Your fund is more focused on companies that are jumping or expected to jump their dividend, right?
Right. The critical message here is that you're not just looking at the dividend as an investor. You have to look at what the free cash flow growth is. The free cash flow growth, if it's moving higher, revenues are moving higher, the dividend is going to be pulled higher over the course of the next several years. And you're looking for companies that dividend growth is 3, 4, 5 times the rate of inflation. That's how you get this real type of capital appreciation and get paid well for just holding on and taking on that risk.
Okay, so Stacey, Susquehanna, dividends. Many of these names have been hit hard. Are you stepping in to buy as well? Do you agree with Chad? Disagree?
Yeah, Chad hit the nail on the head there. There's a very different statement of I want a dividend-paying stock and I want a stock that actually has a growing dividend. It's a value company and the company itself makes sense. Let's think about what we had last year at the start of 2016. The Fed was supposed to raise 4 times. Right, so the dividend play wasn't really going to be the hot trend of the year. And it turned out to be the really big trend, particularly for the first half of the year. Utilities, which typically have a higher dividend paying yield, were just where all of the money was moving. And that has shifted tremendously. Post-election here, where we've seen more money moving, is still names that pay dividends, but they're more value companies, more companies that dividend can continue to grow. So if we think about where the money is not going, it's the utilities or it's the consumer staples where some of those valuations just really got ahead of themselves because everyone wanted yield. So I think Chad's absolutely right. We do still see investors moving to areas where they're going to have dividend exposure. It's just what I would consider a more educated dividend exposure rather than the quick 3 to 5% on a name that the valuation has just gotten out of hand.
We will call that from now forward the educated dividend exposure as opposed to the uneducated dividend exposure. Stacey, Gilbert, we appreciate your educated view as always. Chad as well, thank you both. Folks, check out the live version of Trading Nation in the 1 to 3 p.m. hours of Power Lunch on CNBC. We'll see you there for that as well. I'm Brian Sullivan. Have a great day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.